As you get closer to or past retirement age, you might be thinking about moving to a new state to spend the rest of your days. If so, you might want to think about moving to one of the states with the lowest taxes for retirees. There are factors to consider if you are thinking about moving. Before relocating, you should examine a number of important factors, such as the local climate, your proximity to friends and family, your access to high-quality healthcare, and many others. However, remember to include taxes on retirees in whatever state you're considering in your list of key considerations. Depending on your circumstances, the combined state and local tax burden in one of the best places to retire for taxes may be thousands of dollars less per year than in another. Here are 10 tax-friendly states for retirement. Number 10, Tennessee. No taxes are withheld from Social Security benefits, pension payments, or disbursements from retirement accounts for residents of the volunteer state. The reason for this is that Tennessee is one of just a few states without an income tax. It's also a state without estate or inheritance taxes. Property taxes for a couple owning a $100,000 house in the state would be around $560 a year. That is well below the national average. Additionally, the state has property tax relief programs that reimburse senior citizens who qualify based on their income for property taxes. For homeowners 65 and older, Tennessee also offers a program to freeze property taxes. The average total state and municipal sales tax rate in the state is 9.5%, the second highest in the nation. Groceries are taxed by the state of Tennessee at a rate of 4%, making it one of the few states that do so. Number 9, Idaho. It might not appear to be a tax-friendly state for seniors at first glance. All income in Idaho is subject to taxation, with the exception of Social Security and railroad retirement payments, and its highest income tax rate of 6% begins to apply at a relatively low income level. Although there is a sizable deduction for retirement benefits, it is only open to retirees with qualified income from a government retirement plan. But if you look a bit closer, there are certain tax benefits for retirees. Sales taxes, for instance, aren't too bad. The municipal governments only add an average of 0.2% on top of the state rate, which is 6% for the entire state. Overall, Idaho's average total state and local tax rate is 6.2%, which ranks it as the 15th lowest in the nation. The state also provides a tax credit of $100 per person to offset food taxes, which is doubled to $120 if you're 65 or older and will rise to $140 starting in 2023. If Idaho residents compare their property tax bill to friends and family in most other states, they should be pleased. At about $492 per $100,000 of house value, the state's median property tax rate is the 5th lowest in the nation. Additionally, there are no estate or inheritance taxes, and homeowners of 65 years and older with income under specific thresholds may qualify for a property tax reduction or delay. Number 8, Arizona. Social Security benefits and up to $2,500 in income from federal and Arizona government retirement plans are excluded from state income taxes in the Grand Canyon state. Arizona also exempts military retirement income from taxes. The majority of retirees pay relatively modest income tax rates. The two-bracket tax rate structure is 2.55% and 2.98%. The estimated property tax on a $100,000 home in Arizona is only $508 per year. Homeowners age 65 and older can freeze the value of their property for real estate tax purposes for 3 years if they lived in the home for at least 2 years and their annual income is below $43,872 for one owner or $54,840 for two multiple owners. Arizona does have higher than average sales taxes. 8.37% is the average combined state and local rate, ranking 11th highest in the country. Arizona doesn't have an estate or inheritance tax, which makes it a more alluring place for wealthy seniors to retire. Number 6, South Carolina. With a delightful selection of income tax reductions, the Palmetto State gives some genuine Southern hospitality to retirees. Social Security payouts are fully excluded. Taxpayers 65 years of age or older can subtract up to $10,000 of their retirement income, while taxpayers under 65 can remove up to $3,000. Seniors are also eligible to deduct an additional $15,000 in taxable income. Retirees benefit from South Carolina's low property tax rates as well. A $250,000 house in the state only pays an average property tax of $1,295 on a statewide basis. For homes at those price categories, the sums rank 7th, lowest nationally. Seniors may also be eligible for a homestead exemption for the first $50,000 of the fair market value of their property. You must be at least 65 years old and have lived in South Carolina legally for 1 year in order to be eligible. South Carolina appeals to rich retirees because there is no estate or inheritance tax, but South Carolina has one of the highest rates of sales taxes. A 6% statewide levy already exists, and local governments may add up to 3% to it. The combined average rate is 7.44%, which is much higher than usual. Number 5, Nevada. If you don't want to gamble with your retirement funds, Nevada is a terrific spot to live out your golden years. This is due to the tax breaks that the Silver State provides pensioners. Since there is no state income tax, you can cash in your retirement savings and get Social Security payments without being concerned about having to pay a hefty state tax bill, and Nevada doesn't have any inheritance or estate taxes either. The median property tax rate in Nevada is also the 3rd lowest in the nation. Therefore, if a retired couple purchased a $100,000 home in Nevada, they may anticipate paying around $484 in property taxes each year. However, Nevada doesn't provide any unique property tax benefits for seniors. The state charges a tax of 6.85%, and counties may add an additional tax of up to 1.53% as a result. The average combined rate of state and local sales taxes is 8.23%, ranking it 13th highest in the nation. Number 4, Wyoming. In Wyoming, unlike in a few other states, there is no income tax, estate, or inheritance taxes. The state sales tax in Wyoming is only 4%. Additional local sales taxes may add up to 1.8%, which is not much. The state's average municipal sales tax rate is the 8th lowest in the country, according to the Tax Foundation. Wyoming has a low property tax rate. Middle-class families purchasing a $200,000 home, they can expect to spend about $1,090 in property taxes annually. Those amounts are the 10th lowest tax totals in the nation for each price point. Plus, it's also good to know that eligible seniors in Wyoming can delay payment of up to 50% of their property taxes if money gets tight in retirement. Number 3, Colorado. Colorado has low property taxes. The state has the 4th lowest median property tax rate in the country. It is estimated that a retired couple with a $250,000 home will pay $1,213 in property taxes per year. For eligible seniors, there are also property tax exemptions, refunds, and deferrals available. The income taxes are reasonable, which has 4.4% flat rate. Wealthier retirees will also appreciate the fact that Colorado doesn't impose an estate or inheritance tax. So, more of your money can be passed on to your family when you die. Although the state sales tax rate is low, only 2.9%, but local governments can tack on as much as 8.3%. As a result, the combined state and local sales tax rate is above the national average. Number 2, Hawaii. For retirees in the United States, Hawaii has one of the lowest average state and local tax loads. Seniors with higher incomes may be subject to the Aloha State's high income tax rates. Hawaii has 11 income tax rates that are lower than 11%. Benefits from Social Security are entirely tax-free. Employer pensions and other forms of retirement income are also protected from taxation. In Hawaii, the property tax rate is very low. The median property tax rate for the entire state is the lowest in the nation. On a $250,000 home, retired couples' expected annual property tax payments would be just $683. Seniors may be eligible for property tax relief depending on where they reside in Hawaii. The cost of sales taxes is very minimal. Local governments may tack on up to 0.5% on top of the state's 4% tax. The average state and municipal rate is at 4.44%, ranking 7th lowest in the country, and taxes most items including groceries and clothing. So residents often pay more than the low rate suggests. Number 1. Delaware. Delaware is a tax haven for retirees since it has no sales tax and minimal property taxes. For starters, if you reside in the first state, you'll pay no state or local sales tax on goods made within the state, giving you more spending money in your later years. For a retired couple living in a $250,000 house in Delaware, the expected yearly property tax expense is about $1,333. For residents at those prices, those property tax totals rank 9th lowest in the country. Seniors in Delaware may be eligible for a $400 school property tax credit. You might have to live in the state for 10 years to get it. You can leave more of your fortune to the grandchildren because Delaware has no estate or inheritance taxes, or to other family, friends, or charities.